फाइनेंस टीम को सपोर्ट करो, पूरा फैन बनो Dream11।
अब कबड्डी सिर्फ स्टेडियम में नहीं, मोबाइल पे भी खिला। इग्नोर नहीं बड़ी, she is seriously playing कबड्डी।
Welcome to The Debate. Today we are dissecting a major regulatory action that has, sent some real tremors across the Indian startup and gaming landscape. We're talking about the Enforcement Directorate, or the ED, conducting these wide-ranging searches, including at the offices of the online fantasy gaming platform Dream11 and premises linked to its co-founders Babud Sheth and Harsh Jain.
And this action is certainly high stakes. Largely because of the scale and the history involved here. You're talking about searches across more than 25 locations under the Prevention of Money Laundering Act, the PMLA, which is, this powerful statute targeting financial crimes. But the real complexity, I think, is that the core allegation connects Dream11 back to a much, much larger and older financial fraud probe involving Jai Corp Limited and an alleged misappropriation of 2,434 crore rupees. Some of this dates back to 2004.
Precisely. So the central question we have to grapple with today is really the nature of the scrutiny. Is this investigation into Dream11 an indispensable legal effort to trace the alleged proceeds of crime from a complex legacy financial fraud? Something required by a Bombay High Court mandate?
And this is my view. Does this intense focus risk unfairly muddying the waters? Does it conflate these historical real estate irregularities, a 2-decade-old capital problem centered on something called the Urban Infrastructure Opportunities Fund, with the modern operational structure of a major tech enterprise based primarily on what seems to be just familial links? I'll be arguing that this aggressive focus on the tech entity risks mischaracterizing the core systemic crime, which really originated in that legacy real estate fund fraud.
And I'm going to argue that this extensive tracing operation is not just justified, it is absolutely necessary. It's dictated by the sheer magnitude of the alleged fraud and the mandate to uphold India's regulatory standards. I have to challenge this notion that it's merely about a family association. The ED's action is entirely justified because the entire purpose of a PMLA probe is to identify, trace, and attach proceeds of crime, regardless of how many layers deep those funds are buried or which high-growth sector they might have eventually landed in. The law compels this follow-through.
The law compels tracing, yes, I agree. But we have to maintain some conceptual clarity between, let's call it the original sin, and the current corporate structure. The primary allegations center on a massive, historic real estate fund fraud. We're talking about nearly 2,500 crore rupees siphoned from public funds and investors, channeled specifically through entities like Urban Infrastructure Venture Capital and Urban Infrastructure Trustees. That mobilization happened between 2004 and 2017. So fundamentally, this is a capital problem tied to the real estate sector.
But if that legacy capital generated from fraud, moved into the tech firm, it instantly becomes a current corporate problem for Dream Sports. The source material confirms the CBI's FIR alleges extensive financial irregularities involving structured transactions designed specifically to obscure where the assets came from. This included round-tripping through offshore shell firms, we're talking Mauritius and Jersey, and the fraudulent diversion of bank loans to overseas entities. This is, classic complex cross-border money laundering.
I agree that tracing is essential, but focusing so heavily on a fast-growing, highly visible tech entity like Dream11, which operates in a completely different sector, and is based primarily on a family link, Harsh Jain is the son of Anand Jain, a Jai Corp director. That really risks significant regulatory overreach. And that's a compelling point you make about the ED's mandate, but we have to consider the consequence here. The aggressive, high-profile nature of these searches, it risks implying corporate guilt. It creates severe reputational harm long before any formal charge establishes that the tech company was an active recipient or a channel for the proceeds of crime, rather than simply having founders who are connected to the accused parties. That distinction between a founder's personal wealth and the corporate liability of Dream Sports is paramount.
That distinction is exactly what the investigation is trying to dissolve, or at least challenge. Let's focus on the scope of the financial crime for a moment, and why this tracing operation has to be so broad. The scope is defined by the Bombay High Court's directive to the CBI SIT to probe large-scale financial irregularities linked to that misappropriated money. This wasn't simple theft. It involved sophisticated techniques where Jai Corp allegedly used sister concerns to grant unsecured loans and then wrote them off as losses using false and fabricated documents.
Okay, but that methodology, unsecured loans, sister concerns, that is firmly rooted in the 2004-2017 real estate environment.
And that is precisely why it's logical to search the tech company. The core money laundering process, it has 3 steps: placement, layering, and integration. So if the placement was the real estate fund fraud, and the integration is that money being used for legitimate expansion today, the ED has to find evidence of the layering process. And where better to layer vast sums of money than in a rapidly scaling, high-valuation fantasy gaming platform that has complex capital inflows and outflows. The investigation is simply seeking documentary proof of these links.
I have to challenge that point. Framing this as a simple tracing operation, it ignores the profound difference between a legacy real estate firm and a high-valuation tech company that has raised billions from global institutional investors. We have to ask the question, are they investigating a new crime that was enabled by the tech entity, or are they just hunting for money that was generated 15 or 20 years ago? If the money came in through what looked like legitimate investment channels, say a founder putting in seed capital from family wealth, even if that source wealth is now deemed tainted, proving it constitutes proceeds of crime that pass through the firm's corporate structure, that's a very, very high legal bar to clear.
But that's where the power of the PMLA comes in. You mentioned the legal bar, but the PMLA legislation actually shifts the burden of proof. It doesn't require complicity in the original offense. It requires the recipient of the funds to prove that the assets are not proceeds of crime. Once the ED establishes a money trail link, the onus is on Dream Sports or related entities to demonstrate the legitimacy of that specific capital. For a financial crime of this magnitude, over 2,000 crore, the authorities are required to be exhaustive.
That legal reality, though, it demands that the ED be surgically precise. If this money was layered 15 years ago, how do the investigators possibly isolate that specific amount from the billions of dollars of legitimate VC funding Dream11 has raised recently? Is the PMLA suggesting the entire company is now proceeds of crime, or just the initial seed capital? If it's the latter, we're right back to chasing 20-year-old money that has potentially been diluted by legitimate funding rounds 100 times over. The risk is an overreach, where the complexity of the startup's cap table is just interpreted as obfuscation.
Let's talk about that complexity, because that leads directly to the issue of offshore structuring. You focused on the original real estate structure, but we have to ask, how do these allegations of massive cross-border structuring change the equation? The CBI's FIR points directly to round-tripping through shell companies and tax havens like Mauritius and Jersey. This highlights a sophisticated international operation, not just some domestic fraud.
It certainly confirms the sophistication of the original fraud mechanism. Yes.
Exactly. And the movement of money across borders means the proceeds could easily be parked in some opaque structure for years and then routed back into high-growth Indian assets when they reach a certain stage of maturity. I mean, where is the most lucrative place to layer large amounts of capital? A rapidly scaling platform with a massive valuation multiple. Tainted initial investments gain legitimacy, and they multiply in value much faster than legacy real estate assets. This is the integration phase of money laundering, and the searches are necessary to seize documents, digital evidence, to link these offshore flows directly to Dream Sports.
I'm not denying the sophistication of the original fraud, but I would frame the current investigation a bit differently. While offshore entities are flagged in the CBI's FIR regarding the legacy Jai Corp fraud, the ED needs to move beyond mere suspicion based on association. The financial structures of a late-stage unicorn like Dream Sports involve incredibly complex capital flows from sophisticated global players, VC funds, private equity, institutional investors. The risk is interpreting legal transactions like a legitimate investment sourced from a family office as criminal layering solely based on the founder's lineage.
But that risk is inherent when a founder's wealth is derived from a parent company facing charges of misappropriation. The investigation is seeking documentary evidence to establish corporate exposure, which requires going through the company's internal financial records, especially concerning any bridge funding, seed capital, or related party transactions. The officials are explicitly examining whether funds misappropriated in the Jai Corp case were layered through connected entities. This action is rooted in the principle that no sector, no matter how modern, is immune from scrutiny regarding the origin of its capital.
I agree that capital origin must be clean, but let's shift focus to the broader implications for the Indian startup ecosystem. This case sends a chilling signal. It suggests that any startup where a founder has connections, even tangential ones, to legacy capital, be it from real estate, infrastructure, whatever, will face an intense, retrospective regulatory risk that far exceeds standard corporate due diligence.
And I think that message is necessary governance. This is part of a larger trend by the ED to clean up the gaming sector overall, following similar actions against firms like Winzo and the attachment of assets belonging to celebrity endorsers in the 1xBet probe. Governance and clean capital origins are now non-negotiable for large startups. If the government is cracking down on illicit money used for endorsements, it absolutely must crack down on the potential layering of massive pre-existing corporate fraud through the company's structure itself. This level of scrutiny is a sign of market maturity.
Maturity means recognizing nuance. This regulatory intensity, especially with PMLR searches, it must not result in guilt by association across the board. The consequence for the entire ecosystem is significant. This event instantly adds a new, difficult layer of complexity to due diligence for VCs and foreign investors. Before this, they might check for corporate compliance. Now, they have to deeply investigate the founder's entire family wealth history, especially any wealth acquired before, say, 2010. This creates a chilling effect. It makes it harder for founders with legacy connections, even if those connections are entirely legitimate.
That is simply the cost of ensuring financial integrity on a global stage. And the fact is, the ED's action comes shortly after Dream11 had already pivoted away from its core real money gaming business back in August, following new gaming laws. So they are already navigating intense sectoral compliance challenges. This confluence of regulatory scrutiny, PMLA raids, intersecting with sectoral compliance means the firm is under immense pressure.
And that confluence amplifies the unwarranted reputational risk. If the firm is compliant with the new gaming laws today, the PMLS scrutiny must remain surgically focused on establishing a direct corporate link to the old Jai Corp fraud, not on broadly punishing the ecosystem for founder connections. The question for investors becomes very clear. If I invest in a unicorn and 5 years later the founder's estranged uncle is charged with misappropriation, does the ED have the right to seize my investment documents because of a distant family link? This case will help to find that boundary.
To summarize my position, the ED probe, mandated by the Bombay High Court and focused on a nearly 2,500 crore rupee financial fraud, must necessarily trace money through all related entities, even high-growth tech firms. The search of Dream11 is a crucial, unavoidable step to determine if the proceeds of crime from the legacy real estate fund have been channeled or layered through the technology and sports gaming firm. It demonstrates the growing maturity and systemic reach of India's anti-money laundering enforcement.
And to summarize mine, this investigation highlights critical issues about the origin of capital, and frankly, the perils of familial connections in business, especially where legacy capital intersects with new technology. However, the regulatory focus has to maintain conceptual clarity. The primary, massive fraud happened in the real estate sector between 2004 and 2017. The value in considering this case lies in understanding the immense and potentially damaging reputational risk that high-profile tech firms face when an investigation relies so heavily on familial links and PMLA's reversal of the burden of proof, rather than concrete proven evidence of corporate receipt of proceeds of crime.
And we both agree that these investigations are ongoing. Establishing the full money trail, especially one involving multiple cross-border and offshore jurisdictions, can take years.
Absolutely.
The ultimate takeaway for founders and investors, I think, remains the same. Compliance and transparency in capital structures are paramount, and understanding the regulatory environment, particularly the long reach of the PMLA, is essential when you're navigating this complex intersection of legacy capital and new age tech. There is clearly much more to explore here as the investigation unfolds.